It's Monday, March 29th. This is The Street Live. I'm Katherine Ross, and I'm joined by Jim Cramer. Jim, it's kind of a rough day in the markets right now. I'm seeing a lot of red, so what are you watching?
It's early. Don't know. A lot of hangover from this ridiculous situation with the hedge fund that's obviously rogue. I'm looking for things to buy. And I'm doing that because I frankly am not a believer that this event is going to have much of a ripple beyond what's happening, which is that a bunch of brokers really screwed up. Goldman's already come out and said, hey, listen, Archegos, it didn't hurt us bad. We're fine. And Goldman is, that's to me the bellwether. They had to do a lot of block trades Friday morning. We weren't sure what they were, but it turns out that Goldman got rid of what they offered, what they had. And when I did margin, I know that Goldman's really fabulous at getting out of trades. And they obviously did it faster than everybody else. But, now there's a hangover from that. And people are saying, hold it, the game is rigged. I did a real money piece about, the game is rigged. Look for things to buy. And the two that I'm isolating are Costco and Walmart. And the reason why I'm isolating those is because the fabulous Larry Williams, my favorite technician, who's a genius, said these are the days that you want to buy Walmart and Home Depot. I'm sorry, Walmart, Costco. You can buy Home Depot. That's what's recommended. But this is it right here. And I think that that's what people should be doing. Buying those two action alert names and doing them now.
Now, obviously, this Archegos story is worth digging into, and I want to do that in just a moment, Jim. But I do want to take this opportunity because we do have news that the Ever Given, the ship that was stuck in the Suez Canal, is now freed. And we talked a bit about this last week about, how this could impact oil. And I believe that you said that you don't think it's really having an impact on oil. So now that we've got it freed, you talked a lot about oil in general last week. Is this going to be a focus now?
No. And the reason why it won't be is because oil itself does very little goes through the Suez. The boats are too quick. If you go look at NAT, okay, which is the biggest. I mean, that's Nordic America. It's one of the biggest. You'll see that the stock barely went up. And why is that? Because that does oil, and oil doesn't really go through the Suez. What goes through the Suez are oil derivative products, something, ethane, liquefied natural LNG. And so these are kind of not really an issue. They're not enough to move the needle because they're not really oil. They're just oil products. And those are never in short supply, and that's why oil didn't really rally. There's so much LNG out there. It's ridiculous. Again, though, what it does mean is that whoever's got freight, this tends not to be U.S. freight, but whoever's got freight is just going to end up paying more. And, I know that there are outfits that have been able to defy that, like Williams-Sonoma, which is just a fabulous company. Here it is again, which has been able to handle the port situation. But many companies have not been able to. And you want to imagine the big port situation in our case, that's a backup, is San Francisco and LA, of which Williams-Sonoma is deeply involved. And another one, a winner that I think people should be buying right here, right now, action alert name, Union Pacific, down a couple of smackers. I like it very much. And I've got to tell you, Catherine, one of the things that is really interesting is that the Suez Canal situation doesn't really impact the market, and yet the market's kind of not acting great. And this hedge fund, Archegos, doesn't impact the market, and yet the market is acting very sluggish. That's when you have an opportunity to buy, because we're not that overbought. We are going into a seasonally strong period. Catherine, people should be buying stocks right here.
Jim, saying that is really interesting because I think that there's a lot, and you mentioned this both in your Real Money column and on CNBC this morning about whether or not the market's rigged, and I want to get into that, but I think that we need to set the story a little bit, Jim. So take a step back with me. Your Real Money column, as I mentioned, focuses on Credit Suisse, Archegos, and ViacomCBS. Now, for those investors who are wondering why we're mentioning this, Archegos is a hedge fund which was forced to liquidate its positions, and Credit Suisse and Nomura have already warned that earnings hits could happen due to the margin calls. So, Jim, do investors need to dig into this story, and what kind of advice do you have for investors who own them?
We need the brokers to put out what Goldman did. I mean, Goldman said, listen, minimal impact, not really a factor. And yet Goldman stock is down for the second straight day. Well, Goldman's an opportunity. I mean, when I say opportunity, what I want people to do, I want these thinking old millennials and thinking scared Gen Xers to wake up, to stop being so scared, and take advantage of these situations. I mean, I may be older, but I think a lot younger than these people. I mean, a lot of these people are headed for the exits. They think, oh, it's rigged. That's precisely when you should be looking for opportunity. But there's such a bunch of ninnies that they sit there and they just talk about like GameStop. Now, GameStop is the exact, here they defeated the hedge funds. This time another hedge fund blew up. But I want to urge these people who are scared and afraid to even look at their statements because they got blown out in Twilio or whatever, I don't know, Zoom. They should be thinking about what to buy. And I have to tell you, Katherine, those who think old will not make money. It doesn't matter what age you are. A boomer, a suit, a non-suit, a skinny jeans. Focus on opportunity. And yet I find that people, like the NASDAQ's down, and they run because they're scared. They don't want to go in there and buy Union Pacific, or they're afraid to buy Disney, and they don't want to buy Goldman. They live in fear, these people. The Gen Xers live in fear. They got to get tougher. They got to understand that the stock market goes down too. I am embarrassed by them. They've got to look at their statement, focus on what they own, and get their act together.
So, Jim, explain to our younger investors watching why you don't say that the market is necessarily rigged in your real money column.
It's like this idiot hedge fund managed to fool a lot of people. They probably feel dumb as wood. Obviously, the guy dissembled and fooled, everyone. So it was a foot race. Goldman got the collateral. They sold what they had. But, they did, this fund looks like they went and hid a lot of their buying. So then you have to ask, well, why wasn't the government involved? But, the government under the previous administration they came on TV a lot. They sounded great, but they never really, they were nice. But it wasn't, I think that if you were a rogue hedge fund, you might have thought, well, you know what, under Trump, I can get away with anything. And maybe that's what this guy felt. Maybe he just said, listen, no, they don't care. They're not going to look. The new sheriff is not going to be as kind to them. A lot of people on Twitter ask me, Jim, do you think this guy will get away with it? And I said, of course, because rich people tend to get away with things. Do I think that's right? No, but that's what will probably happen.
So what you just said kind of feeds into a tweet I wanted to ask you about, Jim, and it's from Tyler Winklevoss, who posted it this morning, and he said, why didn't the clearinghouse call Bill Wong's brokers and call to stop him out? They seem to have no problem calling Robinhood to step out of the Wall Street Bets crowd.
Boy, is that ever right. Once again, Tyler, this guy's amazing. He is such a great guy. People have to understand that the brothers are fabulous. They're nice and they're real smart. And I follow them closely and talk about a right thing. I love that. That the clearinghouse people nailed Robinhood quickly, and that, by the way, that was off of AMC. It wasn't off of GameStop. And these guys, it's like, well, rich hedge fund. You were already, by the way, the guy had already been fined horribly. He'd been prosecuted. So I think that Tyler's right, as always. I shouldn't say, I'm sure there's some things that he did. I've seen him dressed up at the club more than he should be. But I do think that, he always looks good. But I always think that what happens is that's common sense. It is absolutely true that the clearinghouses discovered Robinhood, and remember, it's the little guys at Robinhood. And they had no problem bitch slapping the little, I shouldn't use that term, you know what I mean. They had no problem hurting the little guy. But when it comes to big guys, look how much this guy got away with. It's outrageous. Now, people must have known he was doing these big swaps. Now, maybe he hit it, but these firms should have recognized the risk. But, when it comes to Robinhood, they were all over the risk. They were all over the little guy. It's repulsive. It is outrageous, and it's true.
Yeah, Jim, I was just trying before. I was trying to look up the amount of margin that Robinhood was facing when they essentially had to shut down trading in stocks such as GME and AMC just a couple months ago. $3 billion. Exactly. And that's compared to $20 billion.
They were just all over Robinhood. And, Robinhood didn't know what to do because they didn't. AMC happened so quickly. Robinhood didn't have the right controls in place. That's absolutely true. But talk about not having the right controls in place. This was out and out fraud. Robinhood didn't commit fraud. I mean, Robin, they didn't get they didn't have the right control. But frankly, who would have expected them to have such an avalanche all at once? But all I can tell you is that the clearinghouses they were out for blood when it came to Robinhood, and they were clueless when it came to some rich guy who had already violated the law. So Tyler's right, and not unusual. Tyler helped me. One of the reasons why I bought so much Bitcoin. And Tyler represents a new strain of thinking, which is the recognition that the little guy is getting hurt, even though he is, a so-called big guy. He sure doesn't act like it. Nor does his brother.
So, Jim, based on this conversation that we've had, the question that comes to my mind is, what is your advice to younger investors trying to digest this news?
Well, I think that the younger investors have to open their statements. They can't start saying, you know what, it has to come back. Sometimes it won't come back. I urge people who are now in the acceptance phase of the 5 stages of grief, of which there are many, to get back in the game, recognize that there are opportunities that you can make back. This is what I was talking about when in Confessions of a Street Addict, when I was down 9% very quickly and I realized that the Heinzes of the world were dead wrong. And I had to pivot and learn all new stocks. I had to learn the chemical stocks and the paper stocks. And it was hard as all get out. But, this is when you take action alerts and you see that we like Boeing or Union Pacific, and you start diversifying into some traditional names that are about the reopening, and don't get discouraged. That's why I'm saying that I'm calling them out, these younger people, for acting like older people. And they've got to stop acting like that they are about to be on Social Security and they're going to be on Medicare. And they have to open that statement and take a look and start thinking about what to buy when the NASDAQ's down. Maybe you buy Facebook here. We had a lot of good notes about Facebook. I suggested Costco. Walmart is a buy. But I am urging them to get back in the game. Clear your heads. Stop acting like old people who are worried about retirement, and start going back and trying to make some money. And look at your statement. Maybe it's Twilio. Maybe you buy some Twilio. I happen to like Twilio. But I need these people to start thinking younger. Maybe they should put a suit on so they can think younger. Get a suit, for heaven's sake, and not from Marshalls like I wore when I went to Goldman.
So, Jim, let's go back in time a little bit, because before all of the margin story really hit the wires, one of the main focuses that we just kept hitting on was inflation and the concerns around that. And you talked about it on Friday on your Mad Money show.
Yeah, because I was talking to my friend Matt Horween, who's my writing partner. I deviated a little bit. I wrote Real Money, and then at night I started talking about, look, let's not take it. There are some things there's a great Bloomberg. The semiconductor area there's not much you can do about it. The tariffs wouldn't help. I mean, nothing would help. If Fed raises rates, it wouldn't help. We gotta get these plants back online, the plastic plants. Food inflation, not that bad. If you go listen to Darden, that's positive. Salaries in some places up, but if President Biden goes all in on immigration, then you would have a surfeit of workers. But I do believe that if you do get 10% growth, like Goldman's hinting, then you're going to have some inflation. And I don't want the Fed to raise rates, but if we're going to have 10% growth, I'm in favor of the Fed raising rates. 10% is pretty big. That's a nice number.
Well, and Jim, for investors who are still kind of centered in on inflation concerns, what's your advice to them? What kind of investing strategy should they take on at this time?
Okay, well, look, it's a great question, and I think that what you do is you buy the opening trades. I mean, look at this Nucor, for heaven's sake. I mean, I wish we had bought Nucor for action alert, son of a bitch. I mean, this thing is up, it's at 80. It was at 82 earlier, but it still only sells at 9 times earnings. So, I mean, buy a little Nucor. Buy Union Pacific. Buy Lindy. Lindy's good opening trade. Boeing's the best. I think the world of DuPont here. We moved aggressively into these stocks. Now, a lot of people here don't take action alerts, and I can't help them. I mean, I set the thing up. So you say, well, Jim, why don't you give action alerts away for free? Well, why don't I just work for free? I mean, why don't I pay the people I work for? I mean, give me a break. A lot of these guys who play in the NBA, they would pay. They want to play basketball. But they don't. They still get paid. I mean, they probably like basketball, but they still get paid. Some of these people who say, Jim, I can't believe you get paid to do that. You shouldn't be paid. Well, what am I? Really, honestly, I mean, if I'm supposed to pay the people I work for, that would be a different kind of model. It's not my model.
Jim, I'm looking at LULULEMON, which was your mad dash this morning. It is under a little bit of pressure as people switch into the reopening trade that we've been talking about. But I kind of have a bone to pick with this, Jim, because I'm wondering, I wonder why Lulu couldn't be seen as both a stay-at-home and a reopening trade as we start going back to fitness classes, we start traveling more. I mean, their athleisure wear can be worn anywhere and perhaps even in the office.
Right, and they've got mirror. Yeah, I'm saying this is, will they care? If they report a good number, will they care? And I don't know. I mean, but we'll find out tomorrow. That's the good news. But I think that's a great litmus test. I think Peloton is also another one where we just say, okay, well, look, people learn their Peloton and they like their Peloton. People who didn't know Lulu are now using Lulu. By the way, people who didn't know Darden are going to Olive Garden. So it's entirely possible that athleisure is not pajamas. It's actually something you wear out. So that's why I'm saying it's important to watch. I don't know which way the market is going to guard. I think Lulu's going to have a good quarter. But I don't know which way the market is going to receive that good quarter. And that's what my stop trading was about, is not whether Lulu, someone might just say Lulu's not going to have a good quarter. I think they're going to be wrong. I do think that Lulu does not have a lot of Europe, which is good because Europe's in bad trouble. But I'm just saying Lulu is a great litmus test of whether we should be going and trying to find stocks that do both and that work in both open and close. And I find those are very, very hard to find. But if you find them, let me know.
I mean, Jim, what you had to say about Lulu, I really agreed with. And that's why when I say I had a bone to pick, it was more with the people who had them, like, it must be in a bucket. Like Lulu has to be in either the reopening or the stay at home. And I'm like, the
Restoration Hardware, RH, they were very upset. They were perceived to be in the bucket. The bucket is living hell. Look at this RH. Well, yeah, I mean, look at this. I said that it should be up 100. Okay. It's up 80. I still think it gets up 100. They're not in the bucket. They are in the everywhere. And I think it's really, really important. RH is doing great. Now, we got the RH all over our house. Every time we do a new RH thing, I send a picture to Gary Friedman because my wife is like addicted to RH. Now, it's not cheap, but the alternative of going and buying the really expensive stuff is, I'm glad she's found RH. But RH is the stock that can go up even higher.
What about Southwest and Boeing? Could these stocks go even higher based on the news that...
Pump on and root fatty for the Boeing. Holy cow. I mean, this is great news for Boeing. They got the MAX. People are buying the MAX. They got the 787 Dreamliner's been approved. The stock's only up 4 because of the damn futures keeping the market down. But the Boeing is, Boeing is so off its high. I mean, it's crazy. It should be taken out to 278 that it had in March of 21 because things are much better. I think it goes to 300. I think it goes to 300 straight line. That's why it's big position for action alerts.
That is exactly what I wanted to say.
I'm like I got double down. I got the Boeing. Don't need the Southwest.
And we will be discussing Boeing and Southwest over on Action Alerts Plus because I know that you've got some actionable advice for our members who are wondering what to make of this news. So let's head on over there. Thank you for watching today. I'm Katherine Ross, and we'll see you tomorrow.